Hello, ladies and gentlemen. This is Andrew back with, we're going to go over some Robinhood investing information. So, this is my current balance. I'm not very open about this, but this is what I'm working with. I know by the time you read this, since I do post this typically later than about a couple days later, and this was all be in an open document for you guys to look at. So we're gonna get into this. Um, Here's my 3 month, which is pretty much accurate from when the market bottomed out. If we look at it right here, here is my 3 month chart, and I've been sitting on this for a long time for a lot of reasons. Currently, I'm not in any positions really, other than this, which is about $1,300 worth, but not too much. Took a break right in here. It was pretty much a couple days, and well, it's nothing too bad. Um, Obviously, there's ups and downs, so we don't really want to get too concerned about where you are at one time. At the beginning of July, I wanted to start learning options, so I slowly have been experiencing uh, with selling them, and over the since the beginning of July, I am up this right here, which equates to be about 4.8 or 4.9%. So um, that's not great, but um, if we take a step back further, this is what I've been building off of. So um, obviously, I can go back into my like 4 or 5 year chart, and you'll see both ups and downs of bigger proportions. But um, when I transferred everything over into Robinhood, I slowly started raising my amount that I was playing with month after month by paying myself, as I like to call it. And through that, I was able to cash out some and put that into a house as a safer investment. As we look into that, so obviously I like my investing strategy, and we look at the 1 month. Like I said, about 4% between when I started learning trading options. Um, Selling options. There's a huge difference between buying and selling. The selling is much safer and a more of a flat line. So I experimented with that a little bit, and so that's what it looks like. But I specialize in the tech industry, and when I say specialize, I mean that's mostly what I follow. I'm ETFs, tech, and um, commodities is what I really like. Try to stay out of gold and gas because they fluctuate a lot. And well, yeah, we're gonna go over most of my watch list in order: SOXL, tech-based, chip-based companies, gold, e-commerce, China, GoPro, camera. I use that as a experimental one, and options, Tesla. Um, I get a good laugh out of this, and like ex- looking at the options chain. Apple, tech, Twitter, social media. Um, Not a fan. Facebook. They're controlling. They're one of like the four people in Silicon Valley that is controlling it. Microsoft. Um, Becoming more and more obsolete ever so slowly. I gotta look more into them, see what I'm missing out on. But that being said, I don't think they're all quite up hyped up as they used to be. Starbucks service to people person, everyone knows who they are, but I think their downside is a lot more to come soon. GM Automotive, and well, they're obviously they're going to be looking at a big downturn in the near future. Uh, Bank of America, excuse me, yes, Bank of America. Just making sure. Use them as an indicator on the financial. JKS, which is a solar company. I like this is one of those kangaroo stocks, and as you can see right up in here, It makes very predictable patterns, and even if you look at the charts, like it's gonna stay up here. It is, well, apparently it has still room to grow. It's the 5-year chart, and obviously it has its ups and downs, almost in a predictable fashion. Hence why I keep an eye on it. We'll talk about that in a later time. GE sort of has that same kangaroo qualities, but not too much. Lending tree, mortgages, and loans. They were doing really good and before the crash, and they seem to bottom out. So this still has a lot of room to grow, but you're asking yourself, how much risk am I taking on per share? Lyft, I think this is trash and a half. Sony, um, the video game industry, I like to keep a connection there. EA video games, um, they make most of their money off of FIFA and in-game not in advertisements, but loot box. I forget the advanced auto parts. Um, Not sure why I have them. Toyota Motors. Um, I believe in the next 2-3 years they're gonna combat Tesla in their EV game. Hopefully they don't try to use their Prius because that's a really bad platform. Aaron's. Why do I have them? Because they're in the rent to own furniture business, which is a really good. I I personally like this business model as profitable and long term. Not entirely sure, but I believe they have good footholds. Nvidia, man, they they've skyrocketed lately, the last couple of years. So I like to keep them under wraps. I would put AMD in here. Disney, especially with everything going on. Currently, I value them about $110 a share. Like $110 would be a good buy-in price, and if possible, I would do that. Um, about 140 per share. It's American most of their money off the movies, the parks, and everything else. If you really want to look at my opinion on them, I would go into the next video or 2 videos back in my catalog and look at their uh, due diligence work. Since trying to on pass, one of the possible manufacturers of the cure, Walmart, Amazon, biggest company in pretty much the world. Soon to be Lowe's, great, especially since all this started. Um, Alaska American and Delta. J&J, I would have high regards for. Netflix, a qualitative analysis. GameStop, stop, keep there and just as for the laughs because they're a dead company, bankruptcy. Silver mining, don't remember. Beyond Meat, Warren Buffett owns. I believe this or someone in this space will completely blow up in the next 10 years. That being said, it's if we look at it, I think I made a video a couple months back saying I liked it about, where is it? I made a video a little while back saying I liked it at a certain point. I don't remember what happened, and overnight it just went up. So there's a lot of future potential there. Don't remember. Short-term stock, always like them. Um, don't remember. This is supposed to be Utz potato chips in the near future, and if I can get them for about 13.30, I might buy about 1,000 or two. just as a long term. Coca-Cola. Uh, Coca-Cola, the company themselves, always great. They're not going anywhere. Mortgage company, and I don't remember who you are there. Exposure weight of small cap companies. Obviously, I'm not really going over too much of my portfolio, but um, I hop in and out of these stocks on a regular basis, but nothing too big here. My Ameritrade account was what funded this account to begin with, and about $1,000 a month from my day job and was putting into this last year. If we take a look at chart number 2, where is chart number 2? We're going to look at this real quick. So 2019 total at the end of the year, starting balance starting January was this. So the ending balance, it's the profit. Um, as we said, profits are over here. Here's what I started with. Here's what I ended with. Discrepancy. Here's what I cashed out total. Put that in a house. Same entry point of March. Here's the running balance. So the end of March was a total of 29. Beginning of April. And um, yeah, so 29 right there. Excuse me. Beginning of May, ending of May. Profit. And that's what the running balance of the year is. So don't usually talk too much about that, but this is going up on an unlisted video, so only people with links can see it. So that being said, I'm just keeping this as a future reference point for myself. So I know I am looking at. Obviously, I'm not the most informed in this space, so I'm only teaching what I know and a very short amount about it. That being said, we'll just keep continuing through the playlist and we will go from there.